All right. This is not going to be a motivational video. This is going to be technical. All right. So strap in. I wanted to go over one of the things that I consider to be most important when day trading, and it is to know what days not to trade or what conditions not to trade. All right. So it's going to be pretty simple, and I got some more advanced stuff for this as well. But we're going to start it off simple. So I'm going to start off by marking my key levels here. Today, right now, we're going to use this 10 a.m. key open. I did see a lot of people from my Discord take like these setups and they were failing and they were asking me, is this a good setup, etc., etc. And I was like, yes, it is a good setup, but it's just failing right now. So I wanted to explain why and that failing setups are necessary, all right? Like you can do everything right. Everything can be right about a setup, but it still fails. Why is that? It's just how it is, right? We're traders. We deal with probabilities. We don't deal with certainties. There's no certainty anywhere. You stack probabilities. The probabilities of this setup working are high because this and this. It's not a guarantee. That's why we use a stop loss. Hey. All right. So first of all, the best setup today, this day. This is Thursday, November 13th. I've already seen countless traders crash out on social media, mostly because of how this is all setting up. Now, the first thing you're going to want to look at when identifying high probability conditions is fair value gaps. Yes, I said it, fair value gaps. You can see this, right? This fair value gap inverses. Now, I'm not an inverse fair value gap trader. I would never enter anything similar to this. But what I think inverse fair value gaps are good for are structure, right? We identify drawn liquidity, then we identify structure, then we get to the precise entries. That's kind of how I like to structure all of my trades. Yes, I have a fat beard. Stop looking at my fat, luscious beard. It's Movember, boys. If you're not saving your beard, you don't care about men's health. I look homeless, bro. I can't wait for this month to be over. But anyways, when we see this inverse, you would assume, bullish bias, right? 15-minute inverse, that's pretty powerful stuff, okay? We should pump here. No. Apparently, price has other plans. And I wasn't bullish, to be honest. I've been bearish all week because of these mystical, mysterious little gray boxes here. All right. These are called new week opening gaps, and they are very, very strong draws on liquidity. Now, this one is filled to the halfway point. There's a reason that line is there at the halfway point. It is because that is a very strong point of interest. That is the 50% mark of the new week opening gap. This gets tapped to the tick, and then price shoots off. This happens very, very often. Now, what also happens very, very often, or I would say actually probably 100% of the time, is that the new week opening gap gets completely filled. It's not always going to get filled the same week that it gets made, but I would say 90% of the time it does. All right, so that's why I've been leaning bearish this week. For the inverse fair value gap, we inverse this, right? And this is after 10 a.m. opens. Now, when this candle closes, the 10-15 candle, when this candle closes and we get a regain of this fair value gap, I am very quick to be like, all right, this is not really for me. This to me is signaling a couple of things. One, we could start consolidating, which obviously is not really what happened here. Or two, we could just set up for kind of weird price action where I would like to say, like, there are some days where price action doesn't really follow the ICT smart money concept patterns, or like whatever you want to call it, all right? And these And this is one of those scenarios where you just see PD rays getting disrespected, re-respected, regained, all this stuff. That is kind of like a sign for me to close my laptop a lot of the time. Now, I was still bearish for this gap to get filled, so I mean, it made sense for me for this to get re-inversed. But now, back to the setup. This is actually a very good short setup. The only thing I would say that kind of diminishes the probabilities is this little move right here, right? We tap into that new week opening gap. As I said before, this new week opening gap is a really strong point of interest. And for us to tap into this like that and then shoot off happens all the time. So for me, I would much rather, ooh, my Norwegian accent just came out. I would much rather have us do this where we kind of like, we come close to it, but we don't tap it. And then we have our 10 a.m. entry. All right. Right? This would be a picture perfect setup. Okay. Now this is still a B plus setup, in my opinion. We reject this fair value gap. We have a 1 minute rejection block. We have this 10 a.m. key open, right? This 1 minute candle. We manipulate to the upside, and then we come down, closure below it. And then this would be my entry, right? Why did I not enter this trade? That would have been the trade. Why did I not enter this trade? I'm going to put a 10-point stop on this. Why do you think I did not enter this trade? If you look at this, 10 to 15, even 20-point stops are not always the move, all right? When we have volatile price action, these stop losses are gonna get ran through pretty quick. This could go 15 points into drawdown and still be considered a top tick, but I had a 10-point stop, so I got tagged out, right? That's not really the trade that I want to be in. So in this case, I would want an entry trigger in the form of a rejection block out of this trade. Now, the same goes for this long, which I would not really take, but it's still, why are the colors different, bruh? Let me just, that is, oh my God. Holy unk. My bad. And now it's fucked, okay. And now it's gonna be ugly again, isn't it? Okay, never mind. This is also a decent, why is the text, thank you. My bad, guys, my bad for crashing out. Now this, why is this a valid setup? We manipulate, what I told the guys in the Discord today is like the manipulation on this 10 a.m. is kind of wonky. The manipulation is there, but it's kind of like we manipulate up, then down, then up, then we, so like this is not really the cleanest long entry aside from the new week opening gap. That's why I would never take this long, because of the new week opening gap, right? Pretty obvious drawn liquidity. Like today, NQ was easy to read, but it was hard to enter for me personally and the way I trade. This as well, like we can see this is a pretty clean market maker sell model, although we don't really have that original consolidation, but that's another video. I gotta stop rambling about all these concepts that I haven't talked about. But yeah, if you go on the 5 minute, the reason this is a good trade is because we actually have this 10 a.m. key open at a 5 minute order block. That's really the only good confluences we have with this trade: order block, equilibrium, 10 a.m. key open. For me, that would be enough generally to get into a trade. I like to have at least 3 confluences to enter a trade, and you have it right there. Now, even though this is a good setup, it fails, right? I mean, obviously I know why it fails, because I want this in a week open gap. But this short too fails, like dramatically fails. And that's okay, all right? So this is something that I didn't really understand until I was more mature, if you can call it that. I would always look for this like enigma type, what's the secret algorithm, bro. I remember me and like the boys that I would learn with in Discord like 2 years ago, we would look at like classified government documents that were like top secret, and this is how the algorithm moves, some intense complex math equations, and we were like, oh my god, bro, like this is it, bro, oh my god. And looking back at it now, it's hilarious, but it's super super cringe. And I know some people probably fall into that pit of like trying to chase this 100% win rate mathematical enigma holy grail, right? That does not exist, okay? For me, my holy grail has been high RR, low trade frequency, pretty decent win rate. I made a video the other day showing like my dashboard and stuff, and it's been like 60-ish% win rate with an average of 1 to 7 RR, which, if you know anything about math, that is really, really good. Self glaze, that's, I don't really self glaze that often, but that is really good stats, okay? Um, yeah, these are the stats right here. You can see, I don't know what happened here, probably like a limit that I forgot to cancel or some shit, I don't know. And then you can see average win 660, average loss 95. The win rate is not really accurate because this counts all of my break-even trades as well as my wins and losses, and the break-evens count as losses because you get like fees and stuff. So technically you lose $5 per break-even, which counts as a loss. So this is like closer to 60-65%, and then the profit factor 5.88. Combine these two and you will get a 1 to 7 RR. Now November, these are like my Degen accounts. I kind of just like do whatever with these accounts. I take half-ass, not really half-ass, I take pretty good setups. But like if it's like not really a trading day, I'll still like take a bullshit trade just to get like the $100 day. On Friday, I took $3,000 payouts across the accounts. All right, so it's the next day. Dashboard has been updated. Whoa. And then today, I just took a $100 trade like these, just to get the 5th winning day, and then taking another payout on Saturday across the accounts. So take it away, Powell. Key takeaway from this video is know what days not to trade. I kind of like briefly went over what criteria I look for. And losing setups can be good setups, all right? So if you can even take both of these setups in a day, right? I didn't get triggered into any of these setups because there's no like entry triggers, and this is like really volatile price action. So I would not just limit these setups. But they're still like decent setups, and you can take both of these and you can get off the chart with a clean conscience, right? Like here, you manipulate into a order block, rejection block, you get an order block out of it, we manipulate, blah, 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 you get your entry, blah, blah, fails. Happens. Here as well, 5-minute order block in equilibrium at 10 a.m. key open, we have manipulation below, fails. That's okay. Now, I will admit that entry triggers they have saved my ass more times than I can count, all right? So like, yeah. This technically would trigger me into the trade if I was short biased, which I was not today. So this realistically is would be the ideal setup for me to take today. Did not get triggered in. It's whatever. In hindsight, no, there's not even a hindsight trade. As I said, price action today was easy to read, hard to enter. And that happens, and that's okay. It ain't that deep. So don't make it that deep. Don't just be like fuck this price action and just click a button just for the fuck of it. That is not going to get you anywhere. I have been through that as well, and that just never ended well. So yeah, I'll update that dashboard once that trade gets on there, and then I guess I have not really these 3, but 1, 2, 3, 4, 5 winning days in a row with high RR. Pretty good. I guess it's more because, okay, so 6 winning trades in a row, or winning days in a row. And then there's going to appear one more trade here. So not saying you can't do this with low RR and high win rate. You definitely can. I just don't see how that is any better. I don't think it really gives you a big edge. If you go on a losing streak, you're fucked. Like if you have low RR and high win rate, and you go on a losing streak, you're fucked. You can just erase a week of progress with one little losing streak. Because what you have to realize, the reason that I don't understand these low RR traders is that you have to realize, believe it or not, whether you want to admit it or not, price action is partly random. All right, it is partly random. There is no secret enigma code, blah blah. It is partly random. 100%, it is partly random. Is that going to give you an edge with 1-to-1 RR? Most of the time, no. If you have a super specific mechanical system, like I know some traders have, it makes more sense, right? But generally, 1-to-1 doesn't really make sense if you think about it. It doesn't really give you a statistical edge because price action is partly random. There is no guarantees for anything. Like if you trade 1-to-1 and you kind of like pattern trade, like advanced pattern trades, that kind of makes sense. But I just don't know why you would. Because let's say you do 1-to-1 RR, you have like a really strong draw on liquidity down here. Because like, why would you even trade with discretion if you're doing 1-to-1? It doesn't really make sense. Why would you have your bias set as like a drawn liquidity set to a daily low and then you just TP at the first internal low? Because that's what you gotta do to have like a 1-to-1. I don't get it. It is not my job to get it either, but I think it's easier to gain an edge with high RR and then just bettering yourself, bettering your win rate through experience, and then your discipline through lower trade frequency, right? I have accounts that I do aggressive, and then I have like more long-term accounts that I go heavy size, but like really, really good setups. So there's like a difference there, which I advise you to do with prop firms. So other times where I prefer not to trade, just to give you like a really simple list here now. No News Mondays, I don't trade those. Any like London session before CPI, PPI, NFP, don't trade those. The day before NFP, sometimes don't trade that. And then another thing that is separate from that is if London or Asia expands like crazy, like we haven't had this in a while, but if it expands like crazy, I'm talking like 600 points, I'm not going to trade New York session. I'm just going to expect it to be accumulation because the move happened, right? There's usually like one big move during the day. And if it already happened in the previous sessions, I don't really care to trade. I'm just going to expect accumulation, go on about my day, peace of mind. You don't have to do that. That just makes sense for me. So, yeah, I've seen some insane results from the people that I teach, and this is what I teach, so I feel responsible to keep teaching, I guess. So, hopefully you guys had a good trading week overall. Yeah, lower that trade frequency, and I'm pretty sure your trading is going to improve. Also, I want to say thank you to you guys for like 26,000 subscribers. I have no idea how that happened, but I'm insanely grateful to have a platform and to be able to
show you guys this and for you to like actually appreciate it, and it makes me feel appreciated. So
if you want to see me post more, I post a lot on TikTok and Instagram. So if you want to see like more like day-to-day stuff, me yapping, check that out.